Hi there, it's Bill with Smart Trades, and it's Wednesday, December 22nd, around 1:25 p.m. Pacific Time, and going to do a quick review here of the stock indices, the euro, gold, and crude oil. Right off the top, here's the Dow Jones Industrials cash, and there is a possible count that I see shaping up that we do have a terminal pattern, uh, basically 5 waves up off of the low from late November. It's far less than an ideal pattern. It's definitely questionable in my mind. Nonetheless, we do have breadth divergences, particularly on the NASDAQ breadth, which tends to lead. Also, the Russell, for the first time in a while, has actually not confirmed with the NASDAQ, the Dow, and the S&P, and that sets the stage perhaps at least for a pullback, but we shall see. Also the possibility that we've got a triangle here, which tends to be a pre-termination pattern. That said, and anyone who studies Elliott will probably point out that we've got overlap. That is indeed the case. You could count this possibly as a diagonal triangle, but that's somewhat problematic too, because you've got impulse-looking patterns with internally within 1, within 3, and within 5. So long story short, I think we're into an area where it's worth watching. That said, I don't necessarily favor a top here, but I think it is worth keeping an eye on it. The ideal area, I believe, would be around the 11,590 area, and that's where 5 will be 62% of wave 3. Again, we shall see. Now here's the bigger picture, and off of the July lows we have a potential 5-wave pattern that would target around the 12,020 area, perhaps a little bit after the new year. And these trend lines here are just extensions of that wave 1. I just cloned it and pulled it over here, and again that termination point around 12,000, perhaps a little higher, 12,200, just after the new year ideally, and obviously that's higher than that short-term count. Of note though, 62% of 1, which is the next most likely scenario, comes in around 11,610, so obviously pretty close to the 11,590 target. And certainly, again, an area worth watching if the breadth divergences continue and if we get a bit of a rollover from that area. And here's yet the longer term picture, and you can see again that 5-wave pattern, the ideal target up around the 12,000 area. What I have a problem with here, however, even in this pattern, is that this wave C is relatively small compared to wave A. Equality is the ideal scenario. We're far short of that. We're not even near a 62% relationship of C to A. So I do have some problems with this count. That said, I mean, you can see the clear 5 waves within A and potentially a clear 5-wave pattern within C, and again around 12,000, perhaps 12,020 ideally would be the termination point. One possibility is that this whole rally here is just one of C, and this market has continued to surprise, so certainly that's something to keep in mind. If that's the case, we should have a break back to the previous wave 4 of one of smaller degree at least, and that would be down around the November lows. Here's the S&P. In that case, it's around the 12,085 area, 1,285 area, 1,290 area would be the 1 = 5 for the S&P cash. This is a regression channel, which also peaks right around that area, around the 1290 area basis the cash. NASDAQ 100 cash looks a lot like a wedge in the last several days. Perhaps it's just a reflection of the slow market activity over the holiday period. Nonetheless, it is what it is, so to speak, and we do have a lack of momentum. We do have a break in the breadth ratios here. Now, we've had a lot of false signals on breadth ratios. Nonetheless, usually they've produced some kind of small correction, and indeed that could be the case again, and we could continue higher from here. Also, what we have not had, even though we have had breadth divergences, breadth has not really broken down to make new lows. And what I'd like to see here, if we are seeing a peak, even a short-term peak, is that the NASDAQ advances drop below 1,000 on a closing basis. That would take out these lows over the past several weeks, and that, along with the divergence, I think would be more powerful. Also, I'd like to see it break through the bottom of this short-term channel, if indeed we're putting in a short-term top. As you can see, I've got a potential count here of 1, 2, 1, 2. The implication of that is even if we are peaking short term, there's a possibility we're going to go up and make another new high in the near term. Slightly longer term, the 1 equals 5 scenario comes in around 2,300 basis the NASDAQ. That seems like a bit of a stretch relative to the S&P. The next most likely point for a fifth wave here would be around the 2257, 2260 area. So let's keep an eye on that, particularly if the the S&P is getting up into that, into its targets around 1285, 1290. Russell 2000, very difficult market of late. If you're trying to go short, that is a very strong rally, really not in sync with the other markets, either in terms of pattern or in terms of price. That said, you can count a possible terminal 5-wave pattern. I'm not calling for a top necessarily, perhaps a pullback, because if you look at a slightly longer term view, you will see that indeed that we may be peaking just in a third wave basis the Russell. That said, I don't have high confidence in the Russell count here. The pattern is not that clear either on the short term or the longer term, but again, perhaps a pullback to the previous fourth wave low that comes in around 70 if indeed we're peaking, and we shall see. Gold has declined as we expected. Nonetheless, the pattern has formed what I see as a bullish flag or pennant type of pattern, and I think we're probably going to see gold eventually move higher. That said, the short-term pattern in gold off of the recent lows looks corrective in terms of the rally as well, so perhaps this decline ABC is just the first leg of a larger correction, and we could move down perhaps to the 1330, 1340 area and still be in a corrective style pattern. That said, not really crystal clear on this count, and so no definitive projection there, but to me it does look like this rally is corrective. You can see the drop off in volume. Likely the volume also has something to do with the holidays, obviously. Euro, also a mixed bag. This looks like a bear flag, and we have indeed broken out to the downside. That said, the breakout is accompanied by declining volume, and the pattern itself certainly can be counted as corrective over the last week or two. So possibility still exists that the decline from early November is a corrective pattern, is an ABC pattern. A breakout above the B wave would reinforce that view. That level is 137.72. So a rally above 137.72 favors the potential for new highs. And if we continue in this little wedge here, I think that's also bullish. That said, like gold, this is a definite mixed bag, not a clear-cut picture to my way of thinking at this time. Perhaps it'll clarify after the holidays. In fact, oftentimes currencies have a major move right after the new year, so we'll see how it develops between now and then. Crude oil. Crude oil stronger than expected. I had thought we had peaked in here. We went down sharply, and then we've come right back up. Nonetheless, the pattern overall from the lows in mid 2010 looks corrective to me. Nonetheless, the short-term pattern, again, here's a bull flag and declining volume. It looks like short-term there may be higher prices to come, perhaps up to the 92 area, perhaps a little bit higher. That said, I think again we're in a longer-term bearish pattern, and a break, solidly above this trend line in that 92, 92.50 area, perhaps would be, something to perhaps look at, and also. And again, we may have to wait till after the new year to really see how this pans out. But you'd want to see an increase in volume on that breakout as well. Anyway, that's about it for now. I wish you all happy holidays and a Merry Christmas. Have a great week ahead if I don't talk to you. And thanks so much for watching. Bye-bye.